really warm welcome today to our webinar. I'm very pleased to say that we're being joined by our sponsors, Capita, and we're looking in particular at how to reduce invoice costs by 75% without any detriment at all to purchase to pay and service excellence there. If anything, with a focus on improving service excellence and looking to reduce your cost base quite considerably by 75%. So I extend to you a very warm welcome indeed. My name is Susie West, and for those of you who are on our webinar for the first time, just a very brief background. SharedServicesLink.com is a business community for finance shared services leaders, and we serve this market by extending absolute best practice information through webinars such as this, through conferences that we run in North America and in Europe, and through extensive information that is offered out to members through our online resources, our website. Our website's absolutely fantastic. If you haven't been on it, please do go on that. To have all access to all areas, you do need to be a member, but membership is free. So, so there's a huge incentive for you there. So let's have a look at what the next 60 minutes look like for you today. Very briefly, I'm going to touch on how the session works. I'm going to give you a little bit of context and then, as ever, hand over to the people who really have been at the sharp end of projects like this. I'm going to be handing over to our two presenters for today, and we're going to be detailing how you can indeed reduce invoice costs by 75% and go further in your service excellence aims. We're then going to be taking your questions in the last 10 minutes of this webinar. As far as how the session works, it's a very straightforward platform, GoToWebinar, and many of you have, I know, have used it before. If you do have any technical questions, we do have support on the line. Just use your free text box in your GoToWebinar panel, and we will be responding to you. As ever, questions are vital. You have come onto this webinar for a reason. Please just scratch your heads and think about what that reason is. What are you looking to get from this hour of your very important time? Make a note of it, please, and make sure that you do walk away from this webinar with that question answered. So if you feel like we're not quite on the mark for you specifically, pop that question through to me. As I mentioned, you have a free text box. Just pop your question in there, or it'll come through to me. I will put it to our experts in the last 10 minutes of this webinar. So the intention of this session, what is the purpose of this webinar today? Why are we having this webinar at all? Well, let's think about it. SharedServicesLink.com did their first event in the US last month. It was a very exciting time for us. It's a new market for us, and we ran it in Dallas. And the theme for that event was continuing to cut costs with an eye on satisfying and pleasing, and our word was delighting the customer. And it was something that resonated with the North American audience just as much as we're very certain it resonates with the European audience. The focus for shared services today is indeed much more on improving service excellence and in improving the experience of the customer. And in addition to that, focusing on meeting cost reduction targets. It's a fine balance to strike, but there are shared services organizations out there that are doing it. And this is what we're going to be focusing on today. So with that in mind, I'd like to introduce our first presenter for today, Richard Lancaster from Capita. Over to you, Richard.
Thank you, Susie. Yeah, so if we're just following on from Susie's slide, the agenda today will really follow an overview of Capita Group. We will talk about where it all started, identification of pain points and drivers for change, the vision within the group and the key requirements, the specific operation around finance with P2P in mind, then moving on to the job in hand, the resource and implementation, the process, the challenges. We did measure the critical success factors, results, benefits, service overview, summary and questions. My name is Richard Lancaster, and I work for Capita Total Document Solutions, and I'm involved in the management of a number of the P2P solutions across Capita Group. So Capita Group, who are we? Well, we're the leading outsourcing company in the UK. We're offering business process outsourcing in conjunction with all the relevant support services in the UK and Ireland. We're a FTSE 50 company with annual turnover of 2.7 billion and 45,000 people employed globally. The division which I'm employed for, Total Document Solutions, has 3 decades of experience providing tailor-made data capture and end-to-end document management solutions, which will improve efficiencies and drive down costs. The outsource element of which and the exception handling process for hundreds of thousands of documents per month go through our number of offices UK-wide. We also obviously are looking at the automation of finance functions such as invoice processing, remittance and check reconciliation directly into the business's ERP systems, and the rapid ROI and 100% reduction in paper. With that, I'm going to hand over to Steve Long, who was heavily involved in the implementation of the Purchase to Pay project within Capita Group. So over to you, Steve.
Thank you very much, Richard. Good afternoon, everybody. My name is Steve Long. I work for Capita Group in our Group Systems department, and I was involved in the implementation of our electronic P2P process. As we approached this project, we had a number of drivers for change as to why we wanted to improve our process, and I'm sure a lot of you will be familiar with some of these problems. We're a business process outsource company, and we are continually looking for cost-efficient services, and this is predominantly driven by our need to provide a decent service to our customers at a cost-efficient way. Lots of our areas are around the private sector, and we wanted to remain competitive with those competitors there. We were aiming to meet our client goals and to deliver a measurable service improvement and value for money. We had a very significant volume of paper movement and retention in order to process our P2P documents. And we had a significant amount of manual data entry and rekeying data into our transaction screens. We use SAP as our ERP system. And just to give you an idea of figures of where we were and where we are, when we first implemented this project, we were processing around about 100,000 documents per year. And at the last count at the end of 2010, we've processed just around 400,000 documents. So you can see the volume is significantly increased, and what you'll see later through the presentation is that we've managed to do it without having to increase the FTE count by anything significant. As with any P2P process that's paper-based, there are a number of pain points, and these pain points were things such as a high volume of human error. So for data entry, it's quite easy to miskey a keystroke. The process was very labour-intensive, and we had around about 30 to 40 employees involved in our back-office AP processing process. These people were dotted around the country in the UK. I think we had around about 8 or 9 different AP offices. We had a significant issue with approval and query of documents, as these were all being sent either via an email or via the post. And this meant we had very inadequate lack of controls, and there was a very minimal audit trail available to us. I'm sure many of you may have had a sort of scenario where a vendor calls you, they say they presented you with an invoice, no one's seen it, the AP manager's not aware of it, and then it turns up to be hidden in someone's drawer somewhere, and they've put it there and forgotten it. Another thing around our pain points, we had an analysis of how much we estimated the cost of processing a document was. We estimated this to be around about £8, which is well above the industry standard. And as a result of this kind of slow process with lots of data entry in, we had a bit of a bad reputation in terms of making payments late to our suppliers, which obviously can stretch relationships with them. So these were some of the key things that we wanted to address. And yeah, that's where we are. At this point, I'd like to hand over to Susie, and we have a poll question for you all.
Thank you very much indeed, Steve. So coming up on your screen now, ladies and gentlemen, I'm asking the first question for the day. Actually, we have 2 back-to-back polls coming up now. How many people work in your AP function today? 1 to 5, 6 to 10, 11 to 20, 21 to 30, or 31 or above, 31 or more. So we were just hearing from Steve that they had about 30 to 40 employees involved in their back office AP processing. Their volumes have gone from 100,000 to 400,000. And when they started the project, or the driver for this project was because it was £8 per invoice. So let's do some benchmarking now. Only 60% of you have voted. If you haven't voted, please do so. Just to remind you of the question, how many people work in your AP function today? 1 to 5, 6 to 10, 11 to 20, 21 to 30, or 31 and above. If you haven't voted, please do so. I'm closing the poll in 3, 2, 1. Let's have a look at the results. We had 68% of you responding, and we do have some very, well, I would say high volume organizations on the webinar today, with 53% of you with over 20 people, 21 people in your accounts payable organization. So interesting results there. Let's move straight on, please, to the following question, which is tied into this. It's related to the productivity of your staff. So coming up on your screen now, if you can tick the right box appropriate to you, what is their productivity? For example, how many invoices do they process each per annum? Is it 5,000 or less? 5,001 to 10,000, 10,001 to 15,000, 15,001 to 25,000, or 25,000 invoices per annum each or more. So if you can tick the box most appropriate to you. 49% of you have responded. Please, let's try and get that figure up. We try to get 70%. So if we can match at least the 68% that we managed to attain from the previous poll, I will be closing the poll in 3, 2, 1. Let's have a look at the results. We were at 66% there. Results coming on your screen shortly. You can see that there's a clear winner. So productivity is relatively high there, with 55% of you saying that individually team members within accounts payable, their productivity at 25,000 invoices per annum or more. So very interesting results. Back to you, Steve.
Thank you very much, Susie. Okay, continuing with the presentation, the next stage was to consider what our vision and what the key requirements were for the project to improve our P2P process and to reduce the costs. So just a few bullet points here. So we wanted to ensure that we had operational excellence and we were adding value to our clients. And obviously this meant no detrimental impact to the operational excellence of the business. We wanted to maintain our mutually beneficial relationships with our suppliers. We wanted to make use of technology available to us, and we're aware of some fairly new technology. I believe it's been around probably for about 20 odd years now, called optical character recognition, or OCR. And we wanted to do that in a centralized high volume environment where we'd be scanning the invoices, and we wanted it to integrate with our ERP system, SAP. We also wanted to establish a UK shared service centre, and we were putting things in place to develop an offshore AP processing centre in India. And another key obvious one there is that we wanted the business process to improve. Just a bit of history of how we got to where we were. So this is our operational legacy system. Back in 2002, when we first implemented SAP, we went for a relatively standard SAP installation. We were able to install and be live with our first entities within about 3 months of engaging with SAP themselves. And we initially just installed the main finance module of SAP. At the time then, our typical process ran something like this. We would receive a paper invoice. This could have been anywhere in the UK. People were getting invoices sent directly to them, to various office locations. These would then have to be manually keyed into SAP. there would then need to be an approval of that document, and that would either be via an email or by the invoice actually being sent out in the post and chasing someone around the country. Once we'd managed to establish approval, we were then at a stage where we would actually finalise the booking of the entry into the ledger, and that would then enable us to generate our payments runs. So typically we pay by backs or cheque. And then at the very end of the process, we would then archive our documents. And when I say archive there, what we were actually doing was we were scanning the paper at the end of the process and then doing an exercise of linking those archived documents to the SAP documents, which meant we could then view the attachments related to the transactions if we need to inquire upon them, or for audit trail and that kind of thing. Over the timeline slide here, we just pointed out some sort of key dates between 2002 and 2011, just to give you an idea of when certain things happened and how we've evolved the process. So to start off with, in 2002, we replaced what was our old system called Masterpiece. This was an old DOS-based system, black screen, green text kind of thing. In 2003, we implemented a couple of SAP modules for HR and payroll, which incorporate with our finance module. All the postings flow through. In 2004 was when we started to, well, we'd already chosen our supplier for this OCR software, and that supplier we chose was a company called ReadSoft, and we worked with them to implement the scanners, the OCR technology, the data transfer into SAP, and they assisted in providing the scanners and everything in the setup in our shared service centre up in a town called Darlington in the north of the UK. Around 2006, we then started to do some offshoring, and what we did as part of that is we've got an operation in Mumbai in India, and as part of the data capture part of the process, we have a visual check by a human, ensuring that the computer has captured the right data. We'll go to some slides later on to give you an idea of what that actually means. 2009, we've started to make use of purchase ordering on SAP, and this enables us to do things like a three-way match, and the ReadSoft software that we use is able to deal with a invoice or a purchase order based invoice as well as a straight finance invoice. And then in very recent history, we've made use of our own internal portal, and we've enabled the ReadSoft system to trigger what we call SAP workflows, so we can electronically notify people of when they've got documents to action. Okay, I'd like to hand over to Susie once again for a further poll question, please.
Thank you very much indeed, Steve. So coming up on your screen, let's have a look at what ERP system you are using at present. So is it SAP? Is it, so primarily, is it SAP? Is it primarily Oracle or maybe JD Edwards and PeopleSoft, which of course are now part of Oracle? Sage, Aggresso or QuickBooks? MS Dynamics or MSAX or something else? So about 73% of you have voted, which is a great number. If you're still waiting to vote, please do so. Closing the poll in 3, 2, 1. Let's have a look at the results. 76% of you came in with a response there, so thank you very much to all of you for that. So we do have a clear winner, and it won't be a surprise to many of you on the webinar today. 56% of you are using primarily SAP, 18% Oracle, JD Edwards, PeopleSoft. Only 3% of you using Sage, Aggresso, QuickBooks. Nobody's using MS Dynamics or MSAX. And 24% of you are using something else. Back to you, Steve.
Thank you very much, Susie. Okay, so continuing on, as part of considerations for the project, we needed to consider what the resources and the implementation method that we would take. So the technologies, we were using something, imaging technology, and we wanted to use high volume scanners so that we could scan a high volume of invoices every day. We wanted to collect the data from that scanning to be passed on for processing. We wanted an image to be created which would follow the data and remain with the financial transaction in the system, so it could always be viewed and inquired upon at a later date. Okay, so optical character recognition there, which I've mentioned a couple of times. Our software provider that we chose for this was a company called ReadSoft. They are, and since there's a number of SAP users on the line, they are a recognised partner of SAP, and a lot of the solution that they provide sits seamlessly inside SAP and is written in ABAP code. So to all intents and purposes, from your end user point of view, it looks like SAP. We wanted to make use of electronic interpretation, matching of data. Typically that would be matching of an invoice back to a purchase order and a goods receipt note. And we wanted to have a verification of the data during the process to ensure that the system wasn't making up numbers or misinterpreting values. The way we work all of this is that the OCR data captured, we will either be capturing a purchase order number, which then enables us to work out who the recipient would be for any kind of workflow that we wanted to send off the back of that invoice. And then another method would be to capture a cost center, and we've got approval structures set up in our system which then enable the system to work out who should be receiving an invoice based on their span of control within the cost centers and their level of authority. The workflow that we gave them, we wanted it to be able to, they'd be able to add notes on it, raise queries, they need to be able to approve a document, they need to be able to reject a document, and they need to be able to forward on a document, perhaps to a more senior colleague for approval. Upon approval, the document would be posted to the SAP system and committed to the ledger, and then that would facilitate our payment process, and it meant that we could retain all of our documents electronically. Okay, continuing on, so we established 2 shared service centres, which I touched on earlier. One of those was in Darlington, and that is where we do all of our scanning, and that's where our document management process takes place. A reason for selecting Darlington, a lot of our finance operations are actually based in the capital in the UK, in London, and obviously the cost of labour in the capital is higher than out and about in the sort of further reaches of the country, so that was one consideration. We also wanted to provide a single central delivery address for all of our incoming invoices and other related documents. So with that in mind, that was our shared service centre in Darlington. We established something called a PO box setup, which we did in conjunction with the Royal Mail in the UK, and that would then enable us to sort. They would do some sort of pre-sorting of our documents. Just to give you a bit more background, we have around about 150 legal entities on our SAP system, or they've all got a different name. They all pay their own invoices out of their own bank accounts, so being able to route the invoices according to those entities was a key thing we needed to do. We wanted all of the scanning to be centralised in one location. Obviously this provides economies of scale, and we had some high volume scanners up there. And on the other side, for the second shared service centre, this was for our back office AP. So this was moved offshore to India in Mumbai. This enabled us to reduce the headcount around the UK from about 30 to 40 in sort of, I think I said 8 to 9 different locations earlier, to a single location in Mumbai, and we've more or less half the staff there, from about 30 to 40 to 15 to 20. So a significant reduction in labour costs when you factor in the cost of employment in London or the UK against a person from India. Okay, so our process. So the high volume scanning of our invoices, we consulted with our software supplier ReadSoft. They had a number of scanners that they could recommend to go with their software, and they did an analysis of our document volumes. and then specified a scanner that would fit those requirements. So I think today we process around about 1,500 documents every day. They go through the scanners as this diagram shows. There's the optical character recognition part, or the OCR part of that process, which collects the data for processing in SAP. And then the second part that it's doing is creating an image of the original document, which flows with the data and accompanies it at all times in the system. Okay, so further into the process is the data capture. So how does it capture all this data and what does it do with it? So here's a mock-up of an invoice, and we've got a magnifying glass highlighting the purchase order number. Okay, so the system is intelligent enough to be able to learn where data is on an invoice, and over time you can build up a profile it can be specific to a vendor, and the system will know, okay, this vendor always supplies their invoice number, it's always in the top right hand corner next to a particular word. The data is then inquired upon, and there'll be a visual check made at this stage. So the system has captured a value A, B, C, D, 1, 2, 3, 4. Ones and I's can easily be mistaken, as can a 5 and an S, for example. So there's a visual check made at this stage. Is it 1, is it I? In this case, it's determined it's an I. It's part of a number, so it makes sense that would continue to be a number. And that forms the data validation. And then on the next diagram here, we've got an overview of the OCR data. So on the left, we have an image of the invoice, and there's lots of red and green boxes on here. Red boxes are where the data is being captured from, and the green boxes are the placement holders, and these are the bits I was talking about earlier, where the system will recognize a word, so your ref PO number, and know that the PO number should be somewhere near to that, and that's how it learns those things. What this screen also shows here is on the right-hand side, there's a number of sort of pink and blue boxes there, and these are our key fields of data capture. So we're capturing things like the date of the invoice number, the gross net amounts, taxes, and purchase order numbers and things if we had them on there. This is the part that's done in India for our process on the offshoring in Mumbai. And so they're just visually checking, has the system captured the right value, is the value right, and once they've done all of that, they'll get an OK, they'll give the document an OK, and we would then move into the data transfer. The data transfer is managed via something called remote function calls, and the two systems, the ReadSoft part, the OCR part, and the SAP, or our ERP system where we're capturing all that data, are able to hook up and talk to each other, passing data and images across from one to the other. And what results is we've got a picture of an SAP screen here, which is a typical vendor invoice, showing how the data would populate into a transactional screen in SAP. So we've captured our data, we've transferred it over into our ERP system, and we're now at a stage where we want to get approval of this document. So we are using electronic workflow. It can also be referred to as a web cycle. And so as I said earlier, the purchase order number is something that we've decided to use to determine who the appropriate approver is. And for us, we're fairly simply looking at the purchase order, what was the user ID that was the creator of that purchase order, pick them and send it to them. They would then, in the process screen, receive the workflow. Now the software we've chosen has two ways of interacting with it. One is a web-based screen, which we've customized, and this is a picture of it here. We've put our own color schemes on it. We've put our own logo up in the top left-hand corner. We've added links and things to our career login system and for user documentation. There is another way of doing it, which is via the SAP backend. So if you are an SAP user or you've already got SAP installed, then you can do it that way. A lot of our users are doing the web-based version. They're not SAP users. It means we don't have to install SAP GUI on their machines. So we've got a slightly lesser overhead on IT there as well. The web page, as I alluded to earlier, allows the approving manager who's received the electronic workflow, they can approve, they can reject, they can forward, or they can raise a query. The system also allows the adding of notes, so you can add a note before you forward it on to someone to let them know or pass on a message. Once they've approved, the document is then posted to the ledger. So that's when we get our credit in our trade creditors on the balance sheet, our debit into the P&L. People doing their P&L reports, this is when they'll be able to drill in and see what the charges are on their invoices, in their P&L, and would have the ability to view the actual paper invoice in electronic format to see where that charge came about and what the charge was for. At that stage as well is when we can then make our payment to our supplier. With the change in process, we had to deal with non-compliance. So as part of all of this, and I'll talk a little bit more about what we needed to do with our suppliers on a couple of slides later on, but we needed to engage with our suppliers and they needed to be providing certain things to us. So first one was send the invoices to the right place. We've asked them to send them all to a single location now in Darlington. And another thing was that they needed to provide the purchase order number to us on every invoice. So we reallocated some of the AP team that we managed to reduce from the actual AP processing and put them onto this, what we think of as a more value-adding task, which is to ensure that we only process invoices when they're correctly presented to us. We've got all the right data on it that we need to be able to process it and pay it on time. And so we set up a team that would deal with non-compliant documents. So if any of the rules of engagement that we've established with our suppliers were not met, we would be able to electronically reject the invoice back to them with an image of the invoice attached in the email and with some default text that we set up, and the text would then be modified accordingly to explain to the vendor why we can't process their invoice and what they would need to do when they represent it to enable us to process it. Okay, so we had a number of challenges that we needed to overcome. One I've just alluded to a bit there. So vendor coordination was a big challenge, and establishing some rules of engagement. To give you an idea of volumes, we've got around about 70,000 vendors that we trade with on an everyday basis, and so we needed to communicate with all of those vendors. We tried to reiterate to the vendors that what we were trying to do was, as well as being in our own interest for reducing costs and improving our process, was actually ultimately in their own interest, because we were looking to become a better payer. We would be able to have visibility of all invoices that we've received from them within 24 hours of receiving it because of our SLAs in place for our scanning. And so we thought that these were good things to enable them to see the benefit in buying in and in agreeing to the rules of engagement that we were trying to establish. So the new process involved certain things to do with numbering that we asked them to do, certain things around format. So typically on the format would be things like the legal entity name. As I mentioned earlier, we've got about 150 legal entities on the system. We're all part of Capita, and they all have Capita something in the name, but there's also other parts to it. So getting the right legal entity name was a key requirement for us to ensure we process the document against the right legal entity. And then the other part was ensuring that everyone was going to mail the invoices to our Darlington office. We've got an ongoing process for new vendors that we've established, and that's administered by our accounts payable manager. So no one really is allowed to go outside and engage with a new vendor until the vendor has been checked out, had credit ratings that are done against them. We've validated all of the data that we're proposing that we might set up in a system, such as bank details and things. These are all to ensure that we are getting value for money, to ensure that we're not liaising or trying to transact with any potentially fraudulent vendors, and we would be able to ensure we're getting value for money. Integration of the technology for us was a bit of a challenge, but not too much because of the software provider that we chose, ReadSoft. and as I said earlier, they are a recognized partner of SAP. Most of the solution, well, the solution, once you've got it into SAP, is written in SAP language and looks and feels just like SAP. Okay, there was a certain amount of management of people and management of expectations as to what this project was delivering and how it would be delivered and what was needed from those people. So the way we decided to do that was to have a pilot group. So we picked on one of the businesses that was quite close to us locally, so we could liaise with them quite easily. And we felt that by having a small pilot, we could test it with a few people, we could get their feedback, we could find out how they thought the process worked, was it more efficient for them, did they see the benefit in it all, and we thought that this helped them to feel part of the evolution of the project and the process. Our critical success factors around the project were that we delivered a more efficient process, that we wanted to reduce our headcount or our full-time employees, and both of these really were the key critical success factors which would also enable us to get our return on investment back within a measured time. So in conclusion, we've got a few bits here around results. So after making use of all of that technology, implementing and rolling out the solution, we estimate that we've been able to reduce our back office labour costs by over £500,000. We've been able to move staff onto value-adding tasks such as governance and process-related roles. And we've got a little picture here for our comparative cost per invoice. And so you can see here quite significant really. We are around about £7.63 or around about £8. And we now estimate that to be about £2.10. So we've knocked off a significant chunk of the cost of processing an invoice. We're still not at the world leading, but we're not far off now. Okay, I'd like to hand over to Susie for a further poll question.
Thank you very much indeed, Steve. So coming up on your screen now, Steve's been very transparent with sharing the cost reduction impact with you, so looking at the cost per invoice today. Please do share your cost per invoice with us. So this is an average cost per invoice. How much does it cost you to process an average invoice at present? So if we're looking at all invoices, all invoice types, so manually keyed, electronically received, if you do scanning and OCR and data capture today, if you have a blend of all of those numbers, purchase order, and non-PO, if you know the average of that, please. Is it £2 or less? So these figures clearly are in sterling. £3 to £5, £6 to £8 or £9 and above. Only 45% of you have voted. If you haven't already done so, please do so. These polls are critical for you to be benchmarking against. So the more of you that respond, the more meaningful the benchmarking data. 55% of you have voted. If you haven't responded, please do so. Closing the poll in 3, 2, 1. Let's have a look at some of the results coming up on your screen now. So 14% of you coming in at £2 or less per invoice, so just doing marginally better than Capita, who came in at £2.10. We've got 55% of you at £3 to £5, and 14% at £6 to £8, and 18% coming in at £9 or above. Thank you very much for participating in that, and back to you, Steve.
Thank you very much, Susie. Okay, one more slide for me, and that's just to talk about our benefits that we gain from installing all of this. So we've got improved technology, and we've got improved speed and efficiency. So I think I mentioned earlier, we process around about 1,500 invoices in a day. Typically, our scan team in Darlington have finished scanning all of those invoices by, I think it's around about 11:30, so within about 2.5 hours. There's a team in India that do the verification, and that they are then keeping up with the scanning team. They've typically finished verifying everything by about 3:30, 4 o'clock. And then we've then got all of our invoices we received that morning in our SAP system being workflowed, approved, queried, etc. We've been able to increase our payment on time, which has improved our relationships with our suppliers, enabled us to use leverage against them for securing good deals. We've reduced the costs of our invoices, so down to £2.10 now. We've established offshore shared service centres. We've been able to significantly reduce our headcount. We've got around about a 90% reduction in typical employee costs. This is predominantly backed up by the reduction in the headcount in AP, the number of offices we had around the UK, and factoring in then the offshoring element and the cost of employment comparatively between India and the UK. I've already stated the invoices are all online within 24 hours of arrival, and we've significantly reduced the amount of paper that we're moving around the country within the business. So all of those postages and all those drivers driving around, we're obviously looking to reduce carbon emission footprint these days, like everyone, so cutting out paper is always a good thing for the planet. That's the end of my presentation. Thank you very much. I'd like just to hand over now back to Richard Lancaster.
Thank you very much, Steve. That was very comprehensive, much appreciated. Yeah, so just to give a final overview of the service offering, particularly from Capita Total Document Solutions, we're partners with all the leading industry software providers. As has been alluded to today, we can offer full customization advice with regards to designing of workflows, for example, reads off web cycles. Again, Steve has mentioned we have an arrangement with the Royal Mail, so we can actually start processing the work at 6:30 AM, and also include within the service provision the managed PO box address. Again, if your business changes in scale over the year, if there's any seasonal trends, or if you're particularly in growth mode at the moment, then you get full scalability with the outsourcing model. Just to add to that, again, the shared services centre from invoice processing has been proven to be a huge success. The automated invoice scanning, data capture, verification and storage is all managed out of our UK office. Electronic workflow for invoice approval and payments. We can output to all the ERPs we've touched on today, the SAP, Oracle, Sage, and we can integrate with on or offshore AP processing teams for invoice query resolution. And we also have the option to implement e-invoicing. So with that, just the final summary really, referring back to the title of the session, which was how to reduce invoice costs by 75% and further P2P service excellence. We've absolutely demonstrated that is achievable through centralization, automation of back office processes, reduction of people costs, removal of storage issues, and we have demonstrated a very rapid return on our investments. Capita are a 2.7 billion turnover company with 25 years experience and a FTSE 50 listed. So with that, I'd pass over to Susie for any questions. Thanks, Susie.
Thank you very much, Richard and Steve. We do have a lot of questions that have come through, but just before we move through to questions, I just want to share with you again the results from the final poll. I've just had a couple of comments coming through that the timing of that up on your screens wasn't very long. So just for the benefit of everybody, the question was about, just to remind you, it's about your cost per invoice. And these you now visually have on your screen are the results, so please do make a note of that. Right, let's move through to questions. We do have a lot coming through. If you haven't put your question through to me as yet, please do so, and I'll put those through to Richard and Steve. First of all, a question that we've got here, communications to vendors. So I'll put this through to Steve, if I may. Steve, as far as communication through to vendors, to participate in this, to be compliant with the process rules, to know where what they needed to do on their invoice in order to get payment, how did you communicate it to them? Was it just an email, or was it more than that?
Predominantly we used email, being the most sort of cost-efficient way of communicating. Where we had email address details for a vendor, and we do have it for the vast majority of them, Those that we didn't, it would be a letter. I talked about our compliance process that we've implemented to try and encourage the vendors to comply with the new requirements and rules of engagement. That's been quite a sort of significant new thing that we've had to do. It's only a very small team, 2 or 3 people in there, and they do other AP duties as part of their work. So it really is, yeah, predominantly email and post. If we get reoffenders who send 2 or 3 invoices in a row that haven't complied, then they may get a friendly phone call from one of the compliance team just to point out to them that we can't process their invoice and they're not going to get paid unless they engage with us in the way that we need them to.
Okay, and have you actually acted on that? I mean, have there been particular suppliers where they haven't sent you a purchase order and they haven't sent it to the right place where they should be? How kind of stern have you been? Have you kind of struck them off the supplier list, or is it a case by case? How does it work?
It's a case by case. I don't think we've ever got to the stage where we've had to strike someone off from the supplier list, and we wouldn't refuse to do business with them any further. So, yeah, it's case by case, to be fair, Susie. It depends on who the supplier is, what we're getting from them, how much we transact with them. All of these things need to be considered before you react and take a course of action with that supplier.
Okay. Okay, a couple of questions coming through around what you're including in your invoice cost. So obviously we were doing a little bit of a benchmarking poll as the last, which was the last poll question now. Your £2.10p per invoice, could you, Steve, just give an idea as to how you arrived at the figure? What did you include? Did you include salaries plus a bit of an uplift? Did you include the technology? Did you include overhead? What's included in that unit cost?
Right. Okay. So there is the employee costs. So that's factoring in the number of total number of documents we process each year, the total number of people we have involved in the process, in the back-end process, factoring in the cost of the manager approving the documents, and how much it would have cost before if we were sending it via paper and in the post. I think they're the key things that come into the figures. Obviously, these are quite high things to piece together. So they are best estimates, but we have tried to factor in as much of the real costs as we can. Okay.
Okay, and just really to add to that, for the benefit of a number of people who've asked that question, I think when kind of benchmarking organisations like Aberdeen or Hackett, or indeed sharedserviceslink.com do benchmarking exercises like this, it's typically a cost per invoice is from the moment you kind of receive that invoice, so it hits your mail room, or if you receive it in any other way, it's the clock starts ticking from the moment of receipt through to the moment of payment. And typically, as you've just mentioned there, Steve, it's salaries, there's a little bit of uplift. There are technology components that are included, but it doesn't necessarily include the cost of the ERP, as that's kind of stretched out across other parts of the business as well. And that generally boils down, those costs are included within the kind of the average cost per invoice. Okay, let's move on. We have here a question regarding, you mentioned, Steve, in that one consequence of doing this was that your payment terms, you had better payment terms, or you could be in a position where you had better payment terms. Your invoices were being effectively posted quicker. So, first of all, a question that I've got here: did you find yourself being in a position where you were actually taking early payment discounts? So that's my first question. Second of all, did you actually see an improvement, and if so, could you clarify what, in the approval days?
Okay. I'll tackle the discounts part first. We were seeing that invoices were in a fit state, approved and ready to pay, which will enable us to make use of early settlement discounts. But as a rule, it's not something that we do ourselves. But certainly, we've opened up a window of opportunity for ourselves there, because we're now at a stage where the invoice is ready to pay, which would give us that early settlement discount if we were to start making use of it. We're quite heavily involved in managing our cash flow, so even if there is a cost reduction, we feel it's better for us to keep hold of the cash and pay it within the standard terms. That's just the way the managers run this business.
Okay, and the second part of that question, which is about approval days.
Okay, approval days. I don't have any fingers to hand, unfortunately.
Not to worry, that's fine.
What I can tell you though is that if we look at it from the other way, we got into a position where the senior management of the company was starting to get a little bit concerned that we may have been processing invoices too quickly, and this kind of goes a little bit back to the discounts thing, and that they were getting worried that we were going to start paying invoices too early. So that was obviously something that came about because of the vast improvement we made in the process and the visibility that we have of our trade creditors on the system at any point in time, because we've got everything in the system almost immediately.
Okay, so so almost being kind of punished for being too good, I suppose.
Yeah.
Okay, thank you very much. Thanks for that, Steve. Okay, so I realise I'm asking a lot of questions to you, Steve. So thank you for this, and I will come on to Richard shortly. Okay, so a question about approval. Fortunately, we do have a number of minutes for this, so this is good. Lots of questions coming through. Let's stay with approval for a moment. So question is, how does it work with the invoice approval process in the actual invoice cockpit, and is the process automatic?
Okay. Yes, the process is automatic, provided that our suppliers have given us enough data on the invoice to enable us to do that. So the vast majority of them these days do, with the exception of the new ones who then fall into our compliance procedure. But in terms of the electronic approval, we are able to... sorry, I'm just having a moment here. Sorry, Susie, can you just run the question by me once more?
Yeah, sure. It was just really about approval within the invoice cockpit, and how
and the automation of it all, right? Okay.
Yeah, exactly.
Sorry.
Yeah.
Okay, so we had to devise, working with ReadSoft, it came with a number of standard workflows, but we spent a bit of time working out what kind of workflows we wanted, the names of them, which kind of processes we'd need to make use of them. So the vast majority go out on what we've named our invoice approval workflow. Provided we've been given a purchase order number or a cost center, we're able to route that electronically immediately. So we've built rules into the system to do lots of validation and data checks, and provided all those data checks and no errors are found in the document, things like that all the values add up, the tax is calculated correctly, the vendor exists in our system, they're valid with the company code, the tax is the right percentage of tax, all these kinds of things. Provided all those kinds of things are all fine and they're all done within a matter of split seconds in the background, then the system will go and work out who it needs to send the document to. So the purchase order ones we've decided are based on who the user was who raised the purchase order. You may want to do it with who the purchaser requisitioner was. You could set up some default recipients of particular types of workflows. There's a number of options and things, ways around you can do it, and it's all part of I'd call it kind of the blueprinting discussions that you'd have with a software provider around workflow, as to what would be triggers for a workflow and which ones need to be automated, which ones may need to be triggered manually by someone who's managing your cockpit.
Okay, good, thank you. Question for you, Richard, concerning supplier portal functionality. Was the supplier portal part of this solution? And if not, do you offer a kind of a supplier portal that liaises with suppliers and lets them have a look at the status of their invoice, etc., as part of the Capita total document solution?
Again, I think I'll have to double check this one with Steve, but didn't we not write our own front end, Steve? Is that correct, as part of this process?
We've got the web page, which we had a slide of earlier, which was the sort of the blue one that we customised for our colour scheme. In terms of a supplier portal for them to get in and access our systems, no, we don't provide that at the moment. That's mainly because we don't want anyone external getting their hands on our system. I know the technology is there to make it safe and secure, but we've got a lot of data that we need to protect and be very conscious of, so we haven't provided that to any suppliers at this time.
Okay, thank you. And also another question for Richard. What languages and character sets do you support today?
Wow.
I mean, I suppose another question would be, are there any key languages and character sets that you don't support today?
No, I was going to say, that's probably a better way of phrasing it. No, I mean, absolutely, we support any character and language set that's out there. I would answer to that one. I think we do certainly deal with a number of foreign languages. Is that correct, Steve?
Yes, we do. I know the Resoft solution as standard can deal with lots and lots of different currency type symbols and codes for different ISO codes for currencies and countries. You can add in all of the various character sets and data sets. For example, the Russian alphabet, if you're doing Russian stuff, or the Polish alphabet. The system can be made to recognise and deal with all of that.
Okay, good. Thank you very much for that. Okay. Also, a question regarding your first-time match rate. So, do you have a view as to what this technology did to improving your first-time match rate?
Okay, so that's more a question around the purchase order side of things, because that's really the only place where we're doing matching. So just to point out, we have been using purchase orders, and I think I mentioned in one of my slides earlier, only since around about 2009, so it's only relatively recent history for us. I think I don't know how any exact rates. The software we're using comes with an additional piece you can buy, which has got lots of reports and things on. We haven't chosen to buy that, so I haven't got any stats on it, unfortunately.
Okay,
I can give you an indicator, but I would say, hand on my heart, I would think from a PO point of view, matching, we've got to be somewhere around 60–70%, maybe higher.
Okay, and maybe the person who specifically asked that question, maybe you could, if you do find out, you could follow up with them directly regarding that. So 2 final questions, and then I'm afraid we are going to have to close this down. How do you handle down payments or deposits within this process?
We haven't had to, no. It can be made to deal with that. You'd need to set up some additional document types during the data capture, so it's passed through to SAP as a different document type separate from a normal vendor invoice. SAP then has all of the standard functions to deal with down payments and that kind of stuff.
Okay, and my final question is around the validation of the data. So you've got your data set that's been captured by the data capture technology, and obviously you've got your image. Do you just do a spot check validation on a small sample, or do they all need to be verified?
That is up to you. We chose to spot check every single one of them. So even if the system thinks it's got a green light against every field that we're doing the data capture on, it still requires a visual check. That can be removed if you want to improve the process. Another thing which I didn't speak about earlier, if we've got time, is that we have started to make use of XML data feeds from our suppliers as well. So if you've got a supplier who wants to supply in XML, the Resoft data can handle that. There's no need to verify that because a number is a number or a letter is a letter in XML world. OCR literally is interpreting dots on a page and saying that looks like the shape of a letter or number. I think that's what it is. So that's why we feel we need the visual check.
Okay, good. So Richard Lancaster and Steve Long, thank you very much indeed. And ladies and gentlemen, just want to draw your attention to our next webinar that we have on the 8th of December. I know it sounds like a long way off. It's not. It's actually only 2 weeks away. So this is the Agreco shared services case study. So please do come along and join us for that. We then have a webinar series focusing around SAP taking place on the 12th, 13th, 14th of December. Really importantly for your diaries, we have the AP Tech Summit coming up in a couple of weeks, and our flagship European Summit for leaders in financial services. Please block out those dates in your diary now. It's taking place in the Landmark Hotel in London from the 12th to the 14th of March. If you only go to one shared services conference in the year, let it be this one. You walk away inspired and pumped up and ready to drive through the change that you need to in your organization. So thank you very much again for your time and attention, and look forward to welcoming you next time, and goodbye.